Ladies and gentlemen, good day and welcome to RAJSHREE POLYPACK Limited Q4 FY23 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Stuti Beria from Prabhudas Lilladher Private Limited. Thank you, and over to you, ma'am.
Thank you, Rosine. On behalf of Prabhudas Lilladher, I welcome you all to the Q4 FY23 earnings call of RAJSHREE POLYPACK Limited. We have with us the management represented by Mr. Ramswarup Dhar, Chairman and Managing Director, and Mr. Sunil Sharma, CFO. I would now like to hand over the call to the management for their opening remarks, after which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Stuti. Good evening, everyone. I welcome you all to earnings call of RAJSHREE POLYPACK Limited for Q4 FY23. Joining me on the call is Mr. Sunil Sharma, CFO of RAJSHREE POLYPACK Limited. We have already uploaded the investor presentation, and I hope everyone has got the opportunity to go through the same. For Q4 FY23, the company has achieved a turnover of rupees 64.83 crores as against turnover of rupees 51.49 crores for the corresponding quarter of previous year, thereby achieving a growth of 25.92%. The EBITDA of the company increased by 45.8% and stood at 9.32 crores for Q4 FY23 as against rupees 6.39 crores for corresponding period earlier year. EBITDA margin of the company for the quarter improved and stood at 14.38% as against 12.42% for corresponding period of previous year. At the same time, the company earned profit after tax amounting to rupees 2.67 crores for Q4 FY23 as compared to 2.22 crores for Q4 FY22, which was 20.5% higher as compared to corresponding quarter previous year. With regards to our performance for this financial year, company's turnover stood at rupees 252.19 crores against turnover of rupees 198.56 crores for the previous year, thereby achieving a growth of around 27%. EBITDA of the company increased by 31.48%, amounting to rupees 35.49 crores for FY23 as against 26.99 crores for earlier year. The EBITDA margin of the company improved by 15.07% as against 13.59% in the previous year. At the same time, the profit after tax stood at 10.95 crore for FY23 as against 9.55 crore for FY22, which is 14.66% higher than the previous year. The sales mix on the product category as compared to the previous year is for the rigid sheets for FY23, it is 56.7 crore as compared to 56.7 crore in the last year, so this is same. Packaging product has increased from 126.8 crores to 167.47 crores. Barrier packaging has increased from 6.34 crores to 23.85 crores. And injection molding we have started in this year, so we have achieved sales of 4.5 crore in this particular financial year. So speaking about the growth in the barrier packaging product, we have increased our sale almost 3 times from last year. This is owing to the focused business development efforts of the company, and with the current sales, we can comfortably call RAJSHREE POLYPACK as one of the market leaders in the rigid barrier packaging segment in India. We look forward to maintain the momentum in the current year also. Further, the company has also started making inroads in the injection molding product segment with sales of around 4.5 crore achieved during 4 months of financial year 22-23. Our primary product categories have also reported remarkable growth, and given the current order book, we look forward to better the same. Growth in manufacturing business requires consistent investment in capacity enhancement, and we are not the exception. While the company chose to remain asset light when it comes to injection molding, we have invested rupees 31 crore in this financial year to increase our capacities in the core segments. Our extrusion capacity has gone up from 14,700 to 18,200 metric ton. Our thermoforming capacity has gone from 8,020 to 8,770 metric ton. And our printing capacity has increased from 68 crore pieces per annum to 94 crore pieces per annum. Here I find it important to highlight certain specific achievements of our journey since our listing 4.5 years back. We have enhanced our sheet extrusion capacity by 78% since IPO, which includes capacity of 4,000 metric ton per annum to manufacture high-value barrier sheets. Our thermoforming capacity has doubled from 4,320 metric ton to 8,770 metric ton per annum. Further, with ever-expanding demand, we have placed order for another thermoforming machine with installed capacity of 1,000 metric ton per annum, which is expected to be installed by December 23. Our printing capacity has gone up by 83%. We have consolidated and modernized our Unit 1 and Unit 3 at a new location with capacity enhancements. We now have our maiden dedicated installed capacity of 1,000 metric ton per annum of injection molding on toll manufacturing arrangement, and market response is positive. We are working on making inroads in tube laminates for cosmetics and pharma industry. We have received 4 design and process patents during the year, which are expected to give us an edge in the segment. On the product front, I would like to share that your company developed and introduced 45 new products in the various segments during the financial year 22-23. Our aggregated product base now stands close to 200 products across various segments. We have also onboarded more than 30 customers in the current quarter, including some overseas customers. We believe employees are the backbone of our organization, and to strengthen our relationship with our employees, we granted stock options under RAJSHREE POLYPACK Limited Employee Stock Option Plan 2022, RPPL ESOP 2022. This was issued in the month of February 23. Under this scheme, we have issued 16,500 stock options to the employees of the company, rewarding them for their contribution in the growth of the company. As marketing is the key aspect, and we are working on showcasing our presence in every important industry exhibition across the world. During this quarter, in January 23, we attended Ahar Hospitality Expo 2023 in Mumbai and Ahar Delhi in March 23. We also showcased our products in Indian Dairy Association exhibition at Ahmedabad in March 23. This helped us in contacting a large pool of audience of potential customers from dairy and HoReCa sector. In case of Olive Ecopack Private Limited, the construction of factory building is as per schedule, and we have already placed order for multiple machines with advance payment released to the suppliers. We'll keep you posted on the progress for Olive. With this, I would like to invite your questions. Over to you, Stuti.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, Rahul. You're very much audible.
Thank you. Thank you. So the first question is with regards to the revenue. So the existing capacity as we speak today, what kind of sales can be generated with the existing capacity?
We can look at adding another 15 to 20% revenue from the existing capacity.
Mm-hmm. So around 300 crores of revenues are possible from the existing capacity.
Yeah.
And that includes the injection molding, 16-18 crores revenue you had spoken in one of the previous calls.
Yeah.
Sorry.
Including all, whatever investment we have done till date. So, apart from Olive, the paper project, from this investment, we can go roughly around that number.
And what is the future CapEx plan apart from the Olive one?
I would say that we will first utilize this capacity, what is available with us on our hand, consolidate, and as per the requirement, which segment shows a potential. We are looking good. We see good potential in our existing product core segment as well as in barrier packaging. So as things progress, we will take a suitable investment call at the right appropriate time.
But sir, typically, what amount of time it takes to do a capex and get the capacity up and coming for commercial production? Because you mentioned existing can do about 300 crores. We are currently already at 250, 255 crores, 252 crores to be precise. So another 15, 18 months, will we exhaust this capacity? So when do we plan our next step?
As we will have an Olive coming into picture, which will also have substantial sale numbers, we are looking at around 180 to 200 crores capacity from Olive also. So as that revenue starts kicking in as per our holding in that particular company, that will also add to our revenues. So it's not that we will have a lean years in the growth of the company. So by the time we see the growth in the Olive, years time we can look at options of further growth in the core company of RAJSHREE.
Sure. And coming to Olive, sir, do we expect commercial production around November, December?
Yeah, currently as I'm speaking to you, November looks possible.
And how much amount we have already spent till now?
Till 31st March, we have invested 9 crores from RPPL side.
Okay, sure. And how much time it will take this Olive to ramp up to say 180, 200 crores of sales, which you just mentioned?
1.5 to 2 years, we should be able to reach to the capacity of 180, 200 crores.
Oh, that's good. Sure. Lastly, sir, on the margin side, in the previous call, you had mentioned that quarter 1 and quarter 4 are best quarters in terms of margins. This quarter, we have done margins of 13%. And typically, so how do we plan to get to that 15-16% margin mark? Or in what time frame do we expect to be at around 15-16%?
Actually, the overall EBITDA margin for this particular year stands at roughly 14.38% for quarter 4. So as we will further add up to the top line, we definitely will come close to 15%. That's what we are looking at.
So you have included the other income for that margin?
Yeah, I'm saying about the gross EBITDA margin at 14.38%.
Okay. So typically next year, and with Olive also coming in, what can be the sustainable margin in our business?
For RAJSHREE, I would say we will be around 14.5-15%.
Sure. And Olive?
Olive also looks into the range of 13 to 15% as of. As we enter, we will be able to give you more clear picture.
Sure. And so just one thing with regards to the drivers for growth. So typically, So how do we, look for both? It is basically adding of customers, marketing through various trade fairs. How do we go about, on the growth path in terms of improving our revenues? What exactly works?
Yeah, like it is like adding different technologies. Like what we are doing is we entered into barrier, we entered into injection molding, we are entering into paper. These are with respect to technologies, acquisition of more customers, participating into various exhibitions across the globe, looking for export potential. So definitely we have to work on all the aspects to improve the revenue of the company, and the company is working in all these aspects.
Sure. And so just about this margins part, so do we look at margins because you have been...
Mr. Jain, maybe...
Sure, I'll come back. Yeah, I'll come back.
Thank you. The next question is from the line of Ankit Agarwal from Yellowstone Equity. Please go ahead.
Hello. Thank you for taking my question.
Yeah.
My first question is on the GST subsidies. Did we get the GST subsidies this quarter, or is it included in the margin?
No, GST subsidy we have not got as yet because still we have GST credit in our books from our capex. So we expect that to exhaust first that GST which is lying as a credit from capital investment in next 1 or 2 quarters. As we exhaust that, then we will start getting the benefit of GST subsidy.
Okay. So maybe like second half onwards of financial year 24.
Yeah.
Okay. And what will be the quantum of the subsidy?
We are eligible for around 20 to 23 crores of subsidy over a period of 10 years.
Okay, understood. Okay. And is it linked to like revenues or something else?
Yeah, it is linked to the sales in the state of Gujarat because the subsidy is given by the state government in the form of SGST. So SGST refund we will get on the sales.
So any sales into Gujarat, not outside Gujarat?
Yeah, in Gujarat state. Yeah.
Okay. Understood. And so as far as the EBITDA margin is concerned, we were guiding for 15% plus. It's not that far off from what we were guiding, but are there any areas where there could be more operational efficiency, or were there any one-offs which impacted the EBITDA margin this quarter?
Like I would say, like the electricity cost has gone up across, which has increased our manufacturing cost. That is probably one of the reason for also increase into the manufacturing cost and little reduction in the margins. So that's the major factor I would say that has contributed.
Okay. And in terms of, if you look at EBITDA growth versus the PAT growth for the full year, PAT growth is much more subdued related to the EBITDA growth. Is this like a function of the capex that we're doing, which is leading to like depreciation or finance costs, and it seems like also the tax might be also affecting? Are there any? Could you highlight like what are the components which are affecting?
I would say 2 reasons: depreciation and interest. So, around
those are the 2.
6 to 7 crores higher than the previous year. So if we don't opt for growth, probably we can look at 6 to 7 crore extra addition to the profit margin.
Okay, understood. And even in terms of volume, we were probably thinking about doing 11,000 plus metric ton. The volume came in slightly lower than that. Was there like any impact seen on the demand side, or were there any issues on the delivery side?
We have done almost 10,883 tons. So 11,000 was our guidance. So we are almost there at around 11,000 tons.
Okay, so no issues with the demand environment or anything of that stuff, right? Okay. Okay. And what is the kind of volume growth we are targeting for the next year?
On the revenue side, we are looking at somewhere around 15 to 20%. That is what is available from existing setup. So that's what we are looking to achieve in this particular year.
Right. And this does not include the 1,000 metric ton we are going to add in December, right?
No, because that's going to come in December, so we will get that only next year.
Right. Okay. And how much capex are we planning for FY24?
4 to 5 crores.
Okay, including the olive venture.
No, olive is separate. In RAJSHREE, 4 to 5 crore. Olive is separate.
Okay. Any sense on how much on olive?
Olive roughly 10 to 11 crores.
Okay. Okay. Okay, that's it for now. I'll join back in the queue. Thank you for answering my question.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good evening. Sir, I need some clarification regarding the extrusion capacity, the other things mentioned in the investor presentation. First, the extrusion capacity 18,200 includes the 3,900 new barrier packaging capacity that we installed in January also?
Yeah, that's the total capacity.
That is the total, right? So now in the next slide, you have given extrusion production 17,207.
Yes.
But you said now the 11,000 some figure as is that 11,000 is the same or what is the 17,000 and 11,000? What are these two?
The extrusion, this 17,000 is the production from the extrusion, wherein the sheets are sold directly also, and we consume those sheets for the second stage of process, which is thermoforming, and we produce the FG from those sheets.
Okay. So that 11,000, what you say is that is used for the second stage?
No, 17,000 what we have produced in this, 3,500 we have sold directly to the end customer, and balance has been used in-house to make thermoform products.
Okay. And then what is this 11,000 some figure you mentioned to the last participant?
That's the total sold quantity.
That includes what, sir? It includes both the sheets as well as the second stage products also?
Yeah. 3,549 is the sheets, and 3,463 is the sheets, and 7,420 is the thermoform products.
Okay. So, see, why this clarification asked was, now we have already produced 17,000 out of 18,200 capacity. Correct? So that means we are already running at such a high capacity utilization in spite this machine was installed in January. Is that understanding is correct?
So this was installed in January 22.
Barrier packaging?
It was not in January 22, it was installed in January 20, June 21 if I am not wrong. June 21.
Oh, okay. Sir, if that is the case, see, we are already running, usually this extrusion, I think you can run up to 90 to 92% of the, the capacity, total capacity. So that means you must be running at close to the maximum possible capacity, right?
Extrusion can run even at 95-97%. Thermoforming or the mechanical processes are difficult to get full capacity as you have to do a lot of mold changeovers. So extrusion typically 95 to 97% is possible.
Okay. Even then, for whatever the growth you are saying, 15 to 20%, is this 18,200 is sufficient to take care of that growth for the current financial year?
Yes, it will be able to take care of the growth because probably we can Today we are talking this capacity based on 26 days working. If required, we can further start utilizing these machines for another 2 days and increase our requirement if possible for few years or 6 months or 8 months till the time we make further investment.
So this 18,200 you are saying 26 working days of a month. Correct. Sir, how much time you take to get the new machine installed and ramp it up?
Depends from where you are buying and what is the configuration of the machine. It depends. So it's difficult to answer the question. It can vary from 6 months to 18 months.
Achha. So why I was asking is, in case if there is any sudden increase in the demand of our products, so hope we will not run, shortage of the capacity as per your whatever the plan and also.
Yeah. So as I said, like if it's a simple configuration, can be installed in 6 months' time.
Okay, fair enough. So my second question is about the barrier packaging machine. So first of all, how is that working? How much turnover was done in FY23 and how much we can expect in 24?
We have done around 20 to 23 crores of sales in FY23, and we look to do around 32 to 35 crores in 23-24.
Okay. Sir, earlier I think we were expecting something around 15 crores per quarter, right?
That's the total. If we do it on barrier, the entire thing, that's the total capacity available. The same machine can do barrier and non-barrier.
Correct. Okay.
So currently we are utilizing that machine with now 23-24 crore with a barrier. So as gradually we go into barrier, we will reduce our non-barrier products on that particular machine and do more of a barrier with a value addition.
Okay. So you mean to say the barrier we are not doing to the full capacity? It is running at almost at around 50%.
Yeah. So gradually we are increasing that. Like we were at 6 crores last year, we increased it to 24 crores now. So we expect that in another 1.5 years probably we'll be able to use the full utilization of that.
Very good. So in the same machine we were to supply to cosmetic industries also. There were some issues during January or so. So has it been sorted out and can we expect some sales in FY24?
Yeah, we have done some sales in 23 also, and we expect the revenue to come from this segment also for us.
But would that be around 5 to 10 crores type of thing?
We can look at around anywhere between 5 to 7 crores from that segment.
5 to 7 crores. Sir, over next period of 2 to 3 years, both the barrier as well as the cosmetics definitely will go from the current whatever the projections you have given. And in these products, we have higher, EBITDA margins. But even then, your projection given for the, EBITDA margin is still around 15%. Any particular reason?
As over the years, the cost of manufacturing are also going high, and that's putting a little pressure on the margins. But we are in constant engagement with our customers to increase the conversion cost. So we are a bit conservative and at the moment quoting 14.5 to 15% on EBITDA margin. But definitely as this value-added categories goes up, we can look at a better margin for the company.
Okay. Am I allowed to ask some more questions or should I come back in the queue?
Sir, we would request you to return to the question queue.
Okay. Thank you.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Can you, for the POLYPACK, can you talk about how are the efforts going on the business development front, since this will be a new initiative for us?
We are not able to hear you clearly.
Yeah, is it better now?
So slightly better.
Yeah. Can you talk about the business development initiative or the marketing initiative on the Olive ProPack side? Since this is a new product that we are entering, so how are we approaching customers and how are the things developing on the marketing front there?
Yeah. I would say the product is new, but the customer are common for this particular segment for few of the customers which are in QSR segment, and also for our partners who are in this segment. So we are already in touch with the customers both at the domestic level and at the overseas customer. And so we don't need to hunt for the customers, I would say. So we know the customer, we have identified the customers, and in fact the product range is being developed in consultation with the customers. So we are optimistic on achieving the numbers for this category as we come up with the production.
Sure. And how much capex have we spent on this project till 31st March?
We have spent from our side around 9 crores, and overall I think so we have spent around 16-17 crores as a total capex in all.
Okay. And what will be the total cost of capex for this project?
The total capex we are looking at around 100 crores with around 60-65 crores in plant and machinery, and around 30-35 crores in land and building.
Sure. So out of that, we have spent around 19 crores till now.
Yeah, 16 crores till 31st March.
16 crores. Okay. So I think the major cost will come in when we install the machineries and all. So
yeah.
Which will happen in the first half of this year?
No, we are looking to start the installation by October 23.
Okay. Sure. And how much money is left from our side to be invested in Olive?
11 crores further to be invested from 1st April. In this financial year, we'll have to invest 11 crores.
Sure. Okay. And on the debt side, if we look at it, both because of the capex and working capital requirements, the short-term as well as long-term debt has shot up as in 31st March 2023. So, how do we, and we have further investments to be done in Olive and some regular capex also at our standalone facility. So, how do we see the debt for the company going forward?
As I mentioned, 11 crores is what we have to invest, out of which 4 crores we are going to invest from the money which has come from preferential issue of shares. So, so balance 7 and 5, 12 crores is what we look at the total capex in this particular financial year. And so whatever other cash flows we'll generate in this year, we'll be able to definitely bring down our short-term and long-term debt at least by 1/3 at the end of this financial year.
Okay. Thank you, and wish you all the best.
Thank you. The next question is from the line of Dwanil Desai from Total Capital. Please go ahead.
Hi, sir. Good afternoon. You can hear me?
Yes, you're audible.
Yeah. So, sir, I am, this is slightly new business for me, so I'm asking some basic questions. But so in this, the kind of products that we supply to our customers, typically, does our product remain relevant for customers for offtake throughout the entire product life cycle? Or it's only an annual thing, and then they keep on looking at options every year or every certain time frame. How does it work?
I would say this is a primary packaging material which has to be used onto their filling lines. So the products are designed as per their filling lines. So generally the customers don't change or switch to the new vendors unless we do go for, or unless our prices are way beyond the market standards. So we have seen that our customers are with us stick to us for a long period of time.
Okay. So essentially, so what you're saying is that the base demand, once you acquire a customer, and then they ramp up, whatever business with us, then that remains generally steady, right?
Yes.
Is that a right understanding?
Yes, yes.
Okay. Okay. So I think the reason I'm asking this question is that, we have mentioned that we have added around 200 new customers, in FY23, right? So, so considering that our base demand from our customer base existing remains more or less steady, some go, some come, but then this incremental customer addition should drive substantial growth in business. So I'm trying to understand that with this kind of a customer addition, why are we looking at 13 to 15% kind of a volume growth?
What happens, sometimes the customers' product, what they'll come up with, sometimes they are successful, they are not successful. We get business only if they are able to sell their product into the markets.
Okay. So what you're saying is that these 200 customers come to us, develop prototypes, we kind of develop prototypes for them. Only a few of them will go to the market and then ramp up. So hence,
like we make supplies to them once, twice, thrice, and if they are successful, it goes on. Sometimes some of them, they are not able to get those sales numbers. So some over a period of time may also don't continue also, depends.
Okay. And second question, sir, is that, as earlier participants were alluding, we are operating at a very high capacity utilization. So considering the kind of, customer addition and everything that is happening, are you not considering, CapEx slightly early to kind of not miss out on demand?
I would say it's a chicken and egg situation where whether we keep on investing because we've already done a lot of capex in last 2 years. So ideally we would like to consolidate for a year or so, at least in this particular segment, and then we look for further capex.
That's fine.
Thank you. The next question is from the line of Kunal Patel from Ecosystem Capital. Please go ahead.
Hi, thanks for the opportunity, sir. Relatively new to the company. So, first question, should we look at...
You're not audible. Sorry, you're not audible, sir.
Just hold on, sir. Is it better?
Yeah.
Yeah. So, relatively new to the company. So, sir, first question, should we look at in terms of EBITDA per kg or...
There is a lot of disturbance. I'm not able to get all the...
There's a lot of disturbance from your line.
Just
to move to a silent place.
Okay. Is it better now?
Yeah, please go ahead.
Yeah. So, sir, first question is regarding EBITDA. So, should we look at our EBITDA on per kg basis or should we look at in percentage terms?
We've given both the numbers, like operational EBITDA is at around 30 rupees per kilo for the financial year 22-23, and we have given in terms of percentage also. So
no, but just to understand the business better, because when I look at our competitors, generally their EBITDA per kg revolves around 35, 36 rupees, and in good times it went up to 40. Right now we are at 30, so should EBITDA go up to 30, 35 rupees in a normal scenario?
As we add up more barrier packaging sales to our overall revenue, we can definitely see the consolidated EBITDA numbers to go up in near future.
Is it possible to give EBITDA per kg product wise, like how much it is in barrier, rigid, plastic rigid, and injection molding?
That number is not available, but I'll ask my team to send it across to you.
Okay. And the products that we are developing in olive, so there the EBITDA per kg is is much higher than our regular business, or how is it?
It will be in the range of 13 to 15% over there also.
So 13 to 15%. And in terms of per kg, it would be around 35-40 or higher?
Those products are like it's selling in the range of 160 to 180 rupees per kilo. So based on that, we can look at that particular number, around 25-30 rupees per kilo.
Around 30 rupees also. Okay. And lastly, just to understand our capex better, so we are making 20 crores of investment in a 100 crore plant for 50% stake. Is my understanding right?
Yeah, at 50%. Exactly.
Okay, sir. Thank you so much, sir.
Thank you. Thank you. Then the next question is from the line of Rahul Jain from Credence. Please go ahead.
Hello.
Yes.
Sir, two things. One is on the working capital side. Our working capital has gone up in last 2-3 years, and typically this year it has still gone up sharply higher. So it's fair something on that side. What are we trying to? So our working capital was around 45 days 4-5 years back, and then gradually from 45 to 50 days it has gone up to today almost 100 days plus.
Yeah. So as we entered into this barrier packaging segment, there are certain raw materials which are having high lead time. So we have to keep inventory of those materials, and it's a little expensive raw material. Plus, of late, during this period of the year, we are keeping certain stock for the customers for the seasonal demand. So we start stocking up for them from September, October, when the sales are lower during that part of the year. And as I mentioned in my last call also, that we are able to utilize our capacity as we are doing stock for the customers. So that inventory of finished good is available with us. And also our raw material inventory was higher at the end of this year to complete certain MOQ requirements which we signed with our raw material suppliers to get the volume discounts. So that's the reason why we see a little higher inventory as compared to last year. Plus there is a sales reversal of around 4 crores that is also one of the factors.
So how should we look at the working capital going ahead? What is the scope of improvement?
45-50 crores maximum we will have.
Acha. So from the current roughly around 90 crores.
Yeah, it's 63, 64 crores. It will be around 45 to 50 crores will be our working capital.
Okay. And sir, with regards to just a more understanding on the business part, so typically when we talk about the industry where we are and what we are planning to do specific to our company, so how do I look at it in terms of the payback period and the return ratios? So say 100 rupees capex would result in what kind of sales for us and what kind of margins and according to the payback period? How do you look at it?
Generally, the